Hello and welcome everyone. If you're new here to ATC, we are a tape reading focused community. More specifically, we're focused on identifying market makers within the tape. We're focused on creating game plans of what the market makers' intentions are and then following that game plan to a high percentage. So my name is David Torres. I'm a current student here at ATC. I've been a student for about 3 years now. Rich Lepis is obviously the head instructor. This is the foundation of this methodology, and this company is created by Rich Lepis. I've just had the opportunity to learn under him, and many of the other veterans as well in this room. Rich is not much of a social media person. This is not really a marketing company at all. So my intention is really just to be able to provide as much tape reading content out there because it is a small community of people that do it, even though it's literally the foundation of the market in terms of supply and demand. My goal is really just to be able to get as much tape reading content out there and show you guys the capabilities of following market makers, setting up strategies around market makers, and executing on that side of things for the day trade. So with that being said, don't want to keep this intro too long. This video that's going to be coming up here is it's a leak from night reviews. So essentially, we gather three nights a week and we review the tape from what trades that occurred and how to maximize them and lessons learned. Veteran traders come in, Rich comes in, and we just talk about the trades of the day pretty much or the week. So in this particular video, we have our number one setup. So if you haven't watched the 1 through 4 setups, there's a workshop. It'll be linked below, and this is an extension of that essentially. So we're adding more detail and depth using examples, talking conceptually about things like that. So I hope you guys enjoy this video. It's a leak from night review. I'm looking forward to doing more tape reading content like this, having some more personal interaction, showing you guys the ability to tape read, doing some live trades and stuff like that. Check out our Instagram. I've been doing some live breakdown stuff there, but looking forward to bringing more trades to the table in terms of tape reading and really showcasing what this methodology can do. So hope you guys enjoy the video. Hello and welcome everyone to another Elite Night Review. Today's agenda is going to be me presenting some inside thoughts on 1 through 4. This is going to be something that we're going to be doing. We go through all these examples. So my goal here is to be able to classify each one of these trades to a further depth, right? Not each one is built the same, right? Not every pullback is going to be the same. Not every position from the market maker is going to be the same that they need to build upon. So not one trade looks the same. And what we're going to do is be able to identify specifically the differences between, each one of those setups. So for this one, we're going to hyper focus on one. And we're just going to talk about this may be a review to some and new to others, but we're just going to dive into the deep. And a lot of this has been learned through lessons. Obviously, Richard teaches us 1 through 4, but when you're out there in the market, things can you learn by experience and obviously journaling as well. You definitely have the conceptual foundation of what a number one looks like and when the market maker needs to build, but a lot of times I found myself early on missing a lot of detail and being shaken out when there was very obvious things that I was missing that would have clearly told me that the read was wrong, or I was looking for something that didn't present itself. And we'll jump into that, but overall, that's the thought process. A lot of this is, to be honest, so many shakes, so many, I guess just stops hit really at the end of the day when it came to number ones. And you get to a point where you're in your journals and you're analyzing, okay, which number ones make sense and work and which don't, which number ones shake me out the most and why, which number ones work out the most significant and why. So we're going to be jumping into that. So when it comes to our future of breaking these down, I would really like for us to have the ability to define them even further. And when we have these breakdowns, maybe at the end, have them summarize. Okay, this is a number one trade. This is the specific information that we saw that classifies this number one as a significant build type of pullback. So jumping into it, we're going to start with number one. Obviously, this is a little document I have. This is just some notes. So number one trade is the trade where a market maker is showing that they're establishing positions long above print personality, of course, meaning that they are significant enough to show longer terms. So the time frame here is typically not a day trade. They're acquiring at the levels, the major levels, and it's significant above print personality. It's not slightly above, it's dominant, it's showing that this is the time frame that they're accumulating is not for a day trade, and it's really the tip of the iceberg. So that's the foundation of a number one trade. Overall, they're showing significant accumulation, and hence that they have to do significant work within the pullback. And not every print, obviously, at those levels is going to suggest the same type of building. You can have, there's a big difference between 10 and 30 prints, and 8 prints and 28 prints. So there's a significant difference, and we have to be able to discern that and not just group it together as above print personality. And we really have to dive deeper into that. Volume is always going to play a huge role in these setups, and personality is going to play a huge role in these setups. Volume is always going to be key, especially with us elite members. But just going to start off with one. I had two examples kind of outlined just to keep it kind of clear and concise. So one is going to be above print personality prints at multiple levels without a pullback, minimal shorter term buying between the major levels. And typically with these setups, the market makers usually pull back all at once. And a key theme here is a lot of times we don't need to sell on situations like this. And we'll dive into an example. I have an example on this one specifically. I don't have an example number two, but we will find that. And again, these are just two types of examples of a number one trade if you're confused. So, and the question I always have is, this is a single time frame of a market maker that's taking control. What are the reasons that people get shaken out of setups like this? What are the reasons that they miss trades like this? Those are common themes of, these type of setups I see. And the second one is above print personality with shorter term support from other market makers. So you're going to have aspirants at multiple levels that are above print personality that suggest building. However, you're going to have this great volume that's probably going to be above average. And then you're going to have these supporting market makers that come in on the off level side of things above and below those levels. And it's not just one, it's multiple. And we see multiple time frames being combined now, right? So that's the thing is I don't think in the early stages as students you combine and understand the two different time frames with off level and viewing them from the eyes of the dominant market maker. A lot of times you're kind of grouping it all together and you're just seeing, okay, well, that market maker needs to build this to build price target. I'm looking for a pullback, ignoring the significance of the volume and their ability to build, ignoring personality, ignoring the significance of why off level would supporting cast would come in when we know that the market maker should build. And what are some of those common reasons of getting shaken out like this? So those are the two setups. These are the ones that I classify. These are in my journals. These are the two types that I consistently see. The number one, type of number one trade is my favorite. I envision a stock that's being pushed, significant uh, aspirants at multiple levels above print personality. Volume is going to be not the type where it's showing a complete exception, but rather, maybe average or slightly above average. And it's, pushing not a lot of off level in between the levels. It's just show supporting cast from market makers, print personality. Say, just for the sake of an example, is 4. And then at the levels, we're getting 20, 15, 20, 25 at each level. So those, and we're blowing past multiple levels. We're coming to psychological levels. We got print lines. There's really nothing really showing continuation of an extension. We're hitting quite close to the average range on the day, and then we're looking for that building all at once type of setup. Those are some of the best number one trades because we know that there is no other really time frame outside of the one dominant market maker that accumulated all the way up. And on that accumulation, that's not money time. That is, I'm pushing this for a strategy, and that's to acquire to therefore bring it back and build to a high percentage. Can you have those exception days where it doesn't pull back at all? Absolutely. And that's why it comes down to being able to, identify that personality aspect. But those are some of the greatest, most significant monetary pullback number one trades you're going to get. These are the type of number one trades where it's going to pull back 2, 3, 4, 5 increments, right? And it's going to, it's going to be a significant type of trade. And then on the number two type of number one, I know it can be a little confusing, but you're going to have a lot quicker of a pullbacks. With two different time frames being involved, you're not going to have a clear cut, all at once 3 increment pullback. It's statistically not going to happen that way, or else that supporting cast wouldn't print the way that they did print. They would wait on the pullback. It just wouldn't make sense for them to, align when it was going to pull back, 2 or 3 increments. It just doesn't make sense. So we have to have the vision to view not only through the dominant market maker's eyes, but significant off level. And oftentimes that significant off level is day traders. So, the 2 time frames, obviously one day trader, and then the other one is longer term, whether that could be a week, 2 weeks, that's up to them, the market makers. We just know that it is, multiple days, weeks, whatever, rather than today. So those are the two thought process on that. Does anybody have any thoughts on that they would like to add, or have any questions on that? We're gonna dive into an example, and I just really want to pinpoint that to you guys. I know number 2 trades. So this is all speaking about a number 1 trade, but there's 2 different types of number 1 trades, really. I know on the second type, I would always get shaken out of these, thinking that the dominant market maker needs to build, and missing, the volume, the way they reacted to levels, the off level that came in to control the, off level calculations that needed to make money. Because once you get really, really advanced, these second type of number 1 trades do eventually pull back, but you have to have such a stronger conviction of timing, and you have to be so much more in line with the off level to understand, okay, all this off level has, hit their calculations. I know this dominant market maker eventually needs to build. So now this is a great area to be identifying and looking for that situation to come back and build. And then you add variables like range, and you add variables like uh, psychological levels, print lines, things like that. And then you can start to, take those high percentage number 1 trades when it comes to, multiple time frames being involved. But if you're not really aligned with that, and you're still trying to take a number 1 because you're looking at controlling prints and all needs to build, or you didn't really see much of the rest of the story, odds are you're probably going to get shaken on that number 1. Maybe you take 30, 40 cents, but oftentimes you're going to be looking for more because of the significant size of the prints, and you're going to get shaken out on that. And in reality, we're going to be taking a number 4 quickly, following that off level, shorter term, and then eventually transitioning to that number 1. So that's my thought process there on this. I know it's a lot, but does anybody have any thoughts on that?
Yeah, can I chime in? I just wouldn't mind just covering
Yeah,
just a
absolutely.
scenario in both types there, if that's okay.
Yes, perfect.
Yeah. So I'm just thinking of the first type, and I'm just thinking an example. You got your first set of ask prints at 121. Next set at say 120, 150. Your next set at 122, then pushes into psych at 122.50. Whether it doesn't hit or maybe it hits and doesn't really print. And at that point, you're then sort of looking for the bar down, or I guess a trigger down for that short, and then you're sort of. So I guess that would be my first question. In that, is it at that point? Because are there not times where it might consolidate for a little bit and then trigger down, and you're just basically essentially looking for that volume to come in to pull it back?
Yeah, so a thing as well, if we're talking about volume, especially on trades like this, are they taking it short? Is that the thing? They're not. So when it comes to volume, they're not going to use that volume to, hammer it down, retail continue. The volume is not going to be, if we're looking at a chart here, the volume is going to be greater on the push than it is going to be on that pullback. And the
I
reason
see.
behind that is because they're accumulating on the way up, and it takes a lot less for the stock to come back and for them to bring it back. So we're not going to see an influx of exceptional volume to hammer it down. It's just not going to work that way, because that would mean they have to get rid of shares, and their whole intention is to do the opposite, is acquire shares. So realistically, you're not going to see that sharp, huge, great volume like it maybe was in the morning. It's just not going to. That's not realistic. But you are going to see that price action. That volume is going to come in. It's not going to be low, but it's not going to be. It'll be, to be honest, more of an average. You're not expecting significant, but you're not expecting like none, because it has to be kind of an in between. So that's the thought process there on the pullback for that.
Gotcha. And then my next question is that when we get, I guess, control prints at multiple levels, it sort of starts to get a bit murky for me as to what should be the appropriate price target. And the conservative way I play it is, if we've got, say, 3 consecutive levels, that my price target is usually the bottom level, because I've found a lot of the time it's not, whether they sort of take an average or whatever it is that, and sometimes it doesn't even reach that bottom level. So how do you go about approaching when you've got those multiple, because you can sort of work out on for each set of control prints what the price target would be for each one, but then how do you sort of then combine those to have an overall price target for that number 1 trade?
Yeah, no, that's a great question. And I think the way I approach it as well is obviously coming back to that. I mean, if it's three levels, coming back to that first initial level is absolutely a great start. And I think it's, you know, where you should be setting your price target as. There's some key things that matter as well, such as psychological levels. If there's psychological levels in between, the significant size of where the market maker is. Say we're starting at 123 and we're going to 125. It's three levels, but 123 was the most significant. So on that pullback to that 123, we can expect that's where his house is. So we can expect there's more games there, right? So in
Right.
terms of management, I'm definitely going to be looking at it as an area of management. But all in reality, if that's going to be extended and we're going to head down to 120, this is going to turn into this number one is going to turn into a trade where there's going to be market makers that are coming in and aligning short because if we're going from 125 to 120, isn't and that's we're the thought process there is that all that significant buying the market maker did price target realistically is 120 for a pullback from all that buying, right? So for that full price target to get there, we're going to need to see that a shorter term alignment from other market makers that agree with that thought process and are selling. And then we also want to see, that volume come in greater than it would be on just a normal pullback. So that's would be a little bit different to really extend and actually get that full pullback from what they needed to build upon is we need to see that actual selling and shorting to come in. And at that point, you're going to be looking at getting what number two trades in there. So you're going to get bid prints, it'll pull up slightly and then it'll trigger back short. So that's a trade within a trade, right? So trader within an overall trader, market maker needs to build. And then you have supporting casts that are day traders that are significant still that we can calculate and follow that are going to make money short.
Gotcha. So, and let's overlay the supporting market makers in a moment, because so if we had that first scenario that we described, could you possibly have that price action trigger before you see the supporting market makers come on board, and you would use those supporting market makers as a continuation, and so that I can then extend that conservative target?
Yeah, that's the thought process there is okay, but it's also at the same time it's a new trade, right?
Yeah, absolutely. I mean that's a given in that it's embedded in the overall trade. But in terms of the sort of the original trade, and in
Right.
terms of what that then does to the price target, and then obviously risk reward and everything else
Right.
depending on
And
come
a
in
lot
and
of times as we progress and become a lot more elite, we're not, if that 123 was that first price target, that doesn't mean I'm holding because I know it has more than 123 in it the whole way. If we're on the way down and now I'm seeing selling positions that are showing that they're looking to, we had the two phases of selling and now shorting, and now I'm, identifying, okay, there's intentions to make money short here from supporting cast. A lot of times they're going to build on that, and that could be a dollar swing back to the upside. So at the end of the day, I'm not just not touching the position. I'm still maximizing and managing that position as well. Bounce off 123. I'm taking 60% off, comes back up, hits the calculation for the selling that what came in for shorting. I take another short. That's the thought process there.
gotcha, gotcha. Okay. And then the second type of number one, I guess I want to clarify. So we're talking, some control prints. That's again, say, 122 ask prints, and then you've got I guess the shorter term market makers. Now, are they aligning with them in terms of their ask prints as well, or are you talking about when it's their sell prints, when they're
Yeah.
bid prints?
So initially, maybe I didn't make it clear, but it's a great question. So we're getting alignment in terms of to the long side, right? So they're the
Oh,
dominant market makers are buying overall for a longer term game plan, but it's still buying. And then we have the shorter term market makers that come in and they're buying as well on that. So it's really just
right.
showing, the shorter term, is aligning with the continuation for the now.
Right. So let's say, as an example, again, we have 122 ask, and then we start seeing some, 122.05s, dot 11s, 13s. And so would the view there
Exactly.
be that you've got to know that those shorter term market makers need to make their money first before you can then possibly entertain the potential for a number one. And so you'd have to work out what the shorter term market maker's price target is to then say, okay, once prices reach this zone, only then can we even contemplate entertaining a number one. Is that correct?
Exactly. And we're going to take that a step forward too, is once we hit those shorter term calculations and there's nothing to really extend it, that's a situation where we do want to see selling because, they have the
Yeah.
ability, right? To, they were already showing that they were acquiring off level and making money long. So we want to see the two phases, right? Again, up there where they're selling out of those long positions and now they're entering short positions. That's a particular case where, we need that selling to come in, given the strength of, now type of buying that we saw that really pushed this. So we need that extra layer of confirmation in that rather than, the first type of setup of number one, right?
Yeah, that was going to be my next question, but that makes perfect sense. It's a very different scenario to type one when we're just talking about a single set of controlling prints to warrant that. Otherwise if we don't get that selling, we may get the pullback, but then it sort of transitions to a potential number four trade if we don't get that selling. Would that be correct?
Yeah.
The only time we can really take, at least from what I understand, is these two scenarios. Well, it's really just the first scenario where you don't necessarily need to see the selling, but the second one, and it sounds like any other scenario with number ones, we have to see that selling. Would that be correct?
Yeah. So, and a lot of times maybe you might get a pullback if you don't have that selling. It'll might be like a dollar pullback or whatever, given the stock we're talking about, personality we're talking about. But for that full, maybe coming back to that initial position, if it's blowing past multiple levels, that selling definitely needs to kick in. Or else you might get an increment or two pullback, but it might consolidate, come back up, might come back up, test double top, etc.
And what about the scenarios where you've got stocks that say dollar increments and very very thin print personality? Um, are you going to necessarily see the selling, or you would, in those scenarios, particularly just because of how volatile those type of stocks are, you definitely want to see the selling before you got into a short in
Yeah.
those?
Even with something like that, you'll definitely still want to see the selling because there's some extreme volatility within that. And you have to be very, very calculated with those. You got to make sure those shorter term calculations are hit, nothing to show extension. You want to have, oftentimes this is not going to be a normal everyday stock. This is going to be a newer story type of stock that really comes in, maybe trades every now and then, earnings, whatever, and it's going to be extended. So you really want to have as much variables as you can to really show, cycle level as well. So you have multiple, variables to show that the extension is not there, and then you can take that short. But then you still want to see that follow through as well in terms of selling, because if it's up that much, they're definitely going to have that phases as well.
Sure, sure. And I guess I think a great example of where it wasn't a suitable number one was I know Davis and I were watching Tesla in the post market, especially in the last sort of couple of hours. But yeah, it was nothing but off-level buying that actually sort of gave a sort of almost like an exception
Yeah.
number four trade at just before 7 o'clock there.
Mhm. And we
Um,
and we have to think about the aftermarket too. The whole purpose of a pullback is to take retail shares. Are retail in the aftermarket really? No. So it kind of defeats the purpose of a pullback. They're pulling against themselves rather than the interest is, it's an interest perspective, right? Is it there for them to acquire? The reason for them to pull back is to take shares. So if that's not there, especially in the aftermarket, you see all that buying, a lot of times it's going to be an exception.
yeah, yeah, and that's pretty much the same dialogue that Davis and I were having. But yeah.
Yeah, absolutely. Great questions though. Does anybody else have any
One
thoughts?
thing
And
I'd like
that's
to add, Torres, if we have
yep.
time,
Yep.
just sort of as a reference, um, Oxy really brought this conversation to the forefront back early in 2022. Oxy we kind of coined the term increasing higher interest at higher levels. Um, and I think to answer one of the questions that was on your sheet, why would somebody get shaken out of that, is to not be fluid with the market, what the market maker is showing you their strategy is, and really what the entire psychology around doing that is. They're not, in the case of Oxy, that stock was destined to go up. It would have those days where just 3 4 levels would get bought at every time, and if you tried to short it, especially if you were setting price targets based on the first level that you saw, you'd be disappointed over and over again. So just the psychology behind how and why they're printing and what strategies are coming into play. can shine some light on a lot of the dialogue and things that came into this.
Yeah, absolutely. It's a great thought process and example. And a lot of this comes out of experience, right? We've all been in the same place where we've been shaken out of setups like that. So I think just coming back and revisiting it is essential just to it gets to a point where you don't really think about it anymore because you've just been so programmed to know that, this is what it needs in both cases. But, if you're newer and you're not, oh, I've thought about these things, it's definitely something you need to lock in on. And if, you're still a more advanced trader, I still come back to these thought processes and just concepts repeatedly to ensure that I stay on the right track. But we're going to transition to an example here. The whole goal of this is just to give you guys an idea rather than break a complete trade down, but just give you guys a thought process and idea. So this is going to be the example of a number one trade, obviously, but this is going to be one with a minimal off level in between the controlling prints. So it's going to be that we need to, I think, coin terms for these. It's obviously like zooming in on the 1 through 4. So this is like type 1 of number one trade. But just to see this gapped up, this is a very old trade. It's 2 years ago. I don't know why the data was not properly set, but this gapped up to pretty much $3-4. Pre-market from this video seemed like 26.50 bids was the controlling that we've seen thus far. But really, we're just going to come to the open here. And we ended up getting 27 ask. I believe this is broken down somewhere as well, and they're really early on night reviews as well. So if you would want to go back to that, that's out there. But 27 ask relative print personality is probably 3, especially in the open, definitely thinned out a bit. I would say 3 is pretty generous. So 27 definitely above print personality. Is that significant enough to show more than 2 increments? I don't personally think so, but it's definitely a start. It's definitely, I would say, 2 increments would be an honest thought process for a pullback based upon those prints. But as we see here, we get continuation. Interest ends up growing higher and higher in terms of significance of the prints. We end up getting 27.50 psych level, significantly above print personality. Those were hit on the ask. So those, relative to 27, a lot more significant. And if we're just looking at the tape as well, thinned out quite a bit. We're 1 and 2 prints. So that is significantly above print personality. That's not a day trader coming in. That's someone with the longer term intentions and, they're a dominant market maker. And just looking at we know it has the ability to print based upon what they've showed in the pre-market and at those levels themselves. So when we're getting not much shorter term off level really to just suggest or stand out, this is really falling into that category of not having the shorter term off level supporting casting between these setups. Volume is definitely significant. I wouldn't say it's going to be crazy over average. Maybe, we hit, slightly above average 30 million when it traded 22 on average. So it's nice volume. It's there, but it's not exception type of volume where it's in the hundreds of millions. And this is just going to run off of just being an exception. But I'm going to skip in 30-second increments just to give us an idea here. And then 28 ask here. Again, same deal. Above print personality. 3 levels now, right? So back to, it's pretty much a similar example to what we were talking about before with David A's question. This is pretty much 3 increments now. 27, 27, 50, 28 above print personality. No real reactions to any of those levels. No real shorter term leading to any of those levels, right? And this is one big key characteristic to this as well, is this gapped up as well. This made a nice move above. So, significant move, and everything we've seen is, longer term from the dominant market maker. That's not day trade positions. Those are longer term, and that's just the tip of the iceberg, right? So when we see setups like this, at this point, what do we need for this to take a trade? It's a question here. Like, do we need the selling to come into this? Some people, like I remember early on as well in my own journey, I'd be looking for, okay, I need some off level to follow and tell me now I need shorter term above this levels. And I want to see someone, really adamant about off level selling and can follow in just all this alignment. But in reality, this is not one where we're going to find that alignment because the personality's already shown it doesn't even print a lot. How can we expect that when it comes back down? If it does come, that's great, and that's adding percentages. But given the personality, it's not something to be as expected in terms of the off-level type of printing personality, right?
So in this case, would we be looking for something more like maybe not the prints to follow down, but some other variable, an unsustainable bar with unsustainable price action, maybe a psychological level, and then we can use those percentages or spots to look to give us the timing for the number one trade.
Yeah, and absolutely. I mean, we got that psych level here, right? 2750. So spot on with that thought process. And obviously, this is more for purposes of just expanding on the types of number ones rather than breaking down every single detail within this, because this has been broken down. But just want to show you guys, the thought process and an example behind what was mentioned in the two types of examples of number ones. And again, David A, we're looking at the volume here. Is that, textbook? Okay, I need 100, I need 500K volume on this trigger down. No, I mean, look at the volume. Look, I mean, is that, significant? But that price action is there. Key spot under 2750, print line there. It was pretty adamant getting through that level. So again, come back to that thought process example. This is, very spot on.
And at this point, because you wouldn't have gotten in until about 2730 based off that. Because what did we mention that the price target was?
So at this point, again, would be coming back to that 2650 conservatively, but realistically, that 26 would make sense.
Okay, gotcha.
With what we've seen thus far.
But again, you're basing that off the first set of controlling prints at 27.
So
this is where I get confused with that sort of the overlapping price targets or that sort of thing.
Yep. So based upon the 27, like it was 2 increment pullback, that takes us to 26. But realistically, for how much they acquired above, that really shows ability to get to 25, right? But we're gonna need some more information to show that they're shorting as well, right?
Right. So you would enter this with a view of 26, but need more info to continue further.
Exactly.
Okay. Thanks.
But a big point was that volume as well, right? Some people would be looking for 350K. I didn't take that trigger, but in reality, for a pullback, are they really going to use significant volume? And if they would use significant volume, that would have to mean that they're selling shares, which is counterproductive to what they were, told us that their intentions were. So it makes sense why the volume is not, what it looked like in the first few bars.
And from the market maker's perspective, all they'd be doing is just pulling the orders from the bid side of the order book to sort of, and minimal selling to push it down essentially.
Exactly. And then, allow retail to sell as well. They have that. And then it kind of cascades there. And obviously it's a lot easier to come down than it is up. Stocks take the stairs up and the elevator down. Rich has said that.
Just going back to your point, David, about getting shaken on things like this, and it's been a topic we've talked about recently, but trying to apply black and white rules to a set of prints rather than viewing the strategy as a whole. If this is gapped up, it bought at two different levels. I know a novice trader would look at that and say, well, those 27s need a pullback or the 2750s, and they try and short it right from there as soon as they saw downward price action. But sort of letting that offense get set, understanding there is higher interest at higher levels, you're not going to get this 20 cents off of the trigger. As David A said, you'd be taking this around the minor, 27, 25 maybe. But just to be sure that you're not jumping the gun and setting yourself up for that shakeout.
Yeah, no, completely aligned with that thought process there. But, I was at that plays too early on where, okay, well, this is 3 levels. There's nothing off level in between. I would take that off above that 2750 area there and then get shaken out on that second push to 28 there. And then I'd be out and then I wouldn't take the trade again and I miss this whole thing. So, allowing it to, allow the market maker to maximize their volume, allow them to maximize the strategy being played of acquiring all this position and push it on the way above, and then allowing that to work itself out and then take that trigger under that print line and that 2750. It really it sets itself up perfectly. But yeah, this is the end of this video is coming up, so I ended up getting a pullback. You guys can go look back at this. This is 2021. Imagine this probably did end up pulling back to 25 at least. I'd be interested if anybody wants to look that up. But does anybody have any questions on this before we transition here? This is just me presenting further information upon 1 through 4 for you guys. I know.
Great, David. Thank you. Yeah, it really helped.
I know, Keith, you had questions on time frame and timing, so this
Right.
is going to fall into that category as well.
It does. Everything helps today. Great. Thank you.
All right. If no questions, we'll transition here. But again, we're going to be doing that for essentially all 1 through 4s. I'll be providing information, but I want you guys, I'll provide a document as well. I know David A is working on one, and I'll just provide more information on that, and we can compile some examples. And as we get trades throughout the coming weeks as well, have the mindset and thought process of, what we're talking about as well for each 1 through 4. And, I think it's such a key characteristic to understand of like what is actual pullback trade, what's an actual short trade, and defining each one of those into, specific categories and personalities, and just it allows you to have such a significant read on the market maker.
And that Riot video is not an example of a puffer fish #1 trade or a lack of substance #1 trade. And so differentiating between the ones that have serious ask prints to pull back from versus they're, up in a spot where they shouldn't be, and then taking those different trades back. The nuances there are key.
Yeah, absolutely. It's a difference between really getting shaken out or not. Because, a lot of times once you start get a little more advanced, you start to break down setups. You're not typically wrong. Your timing can be off. Where you get to a point where it's like not now, rather than this is not the trade. Get to that point where like, well, I knew this needed to happen. My timing was off. The reads you have, the setups you have, you're just off on timing wise, and these details are really going to help define that aspect. All right, David A, you're going to jump on shop, correct?
Yeah, that's right.
Sweet. So I'm going to change the playback speed to this till I think maybe 1.5. It'll leave you plenty of ability to read this. I just think some parts are a bit slow, but if I remember correctly. But we'll jump in on this starting now.
I'm not seeing anything.
Oh, my fault.
Okay.
Is that better?
Yep, I can see the screen now.
Perfect.
All right, so massive 45.30s there.
Might skip a little bit.
Sure.
So realistically, I think with the setup here in the pre-market, those 45.30s are the most significant that stood out.
Yep. Yep. They're the controlling prints as I see them at this point. So definitely some off-level alignment to push this up to around that 45.50.
Might have jumped too much for you. I'll get it right before the open, hopefully. All right, I'll stop it here and just let it play out.
Cool. Okay. So at this point, I'm just waiting. So 45.30, wasn't it? I was looking for more of an adequate pullback. If it pull up, sorry, if it sort of pushed into close to 45, sort of 46, and then looking for that bar down for that quick number 2, which may have happened, but I couldn't see where that could have happened. But we're getting more, another burst there that's off level, suggesting more of that sort of larger build to the downside. So at this point, with what we've seen, those off levels are 45.10s, those 45s, and then the original 45.30s. Looking for a pull up for a number 2, so I'm not seeing any buying here for a number 3, unless we get new information. Very short term 44.50s. So they would have caused that pull up, but I'm still looking at a lot of the shorter term to sort of make their money before any sort of pull up. So that's a first lot of buying. I wouldn't be enough for me to take a number 3. So at this point, I'm waiting for that pull up. Okay, now Prince with that buying at 45. Oh, well, the question is the trade within the trade. So whether we can get much of a pullback here.
All right, I'm going to pause real quick just for some clarification. So with your current breakdown you said, okay, those 430 suggest a building period, which suggests a pull up. And then you even saw the alignment and you suggested, okay, this alignment can really get us to this 450 area. And it did exactly that. And then once it did that, you got some great off level selling above 45. And I feel like there was some confusion there. You said something about
Yeah,
number two
so
and then number three.
let me run through it and you can tell me where I went wrong. So we saw the original 45.30s, and then I think we then saw some 45.10s before the open, and then some 45 bids. So I was expecting a pull up, given the 45.30s. Maybe it threw me off that it was off level. I was expecting a pull up, a 50-cent pull up from those, just given the sheer size of them. So I guess I was expecting something for like, yeah, up into the 45.80s, or if not 46, to then
Okay.
trigger down.
On that note, okay, so you had maybe I think you calculated that a short-term off level of the bond that came to get to that 45.50, and then maybe you saw the 40.30s, said, oh, maybe an increment that takes us to the 80s. However, once we got that push to that 45.50, and then you saw all that controlling selling, what does that tell you about that ability for that pull up? Because that was pretty significant selling. That was, for it being the open, there was really no off level buying. Should they can show that alignment with the significant pull up, and it was all just dominant off level selling above 45.
Right. So that essentially that they weren't going to get that as much of that pull up, or it wasn't going to pull up as much, given that they probably were able to build quickly, especially given the volume. So I think that was a misread on my part there, because yeah, from what you're describing, it sounds like the entry would have been off about 45.50 down to 45.
Right. In hindsight, everything, yeah, it's all clear in hindsight, right? But
Yeah,
in
of
the
course.
moment, I think even in the pre-market, you calculated, okay, well, it can hit this one increment pull, it takes us to that 480. Realistically, this off-level buying takes us to that 450 area. I want to see some new information to suggest, this is going to be more continuation for the pull-up. But rather, you saw the opposite is the lack of information for continuation of pull-up and strong dominant now type of selling
Right. I see.
above the level like 45, which is right.
Yeah. Okay. No, that makes a lot of sense. That makes a lot of sense.
Yeah, but that's clarified now. I want you to continue to just be fluid with this setup as if you're at your desk. Just even if you miss that, just continue to be fluid with it. I'm gonna start it.
Could you just back it up maybe 20 seconds if you don't mind?
Yep. I'll take it back to the 45s, I believe.
So we had seen some buy, I believe it was like 45.10 and a few other levels. So, and those 05s.
Yeah,
So
I'm
I
taking it
think
back here just to see it clearly for you. Continue. Sorry.
oh, okay, sorry. So it's 45.10s. I respected that short pullback and then that for them to eventually go up. So it looked like ballsy hitting. It looked like it hit on the ask. You got 45.05s again, giving a smaller build. Definitely some off-level interest here for the long. Okay, some now prints there. Okay, so with those two, I'm expecting a very quick pullback, if much at all, given they've already seen enough off level here, and then I'd be looking for a trigger up. I'm not entirely sure how far above the trigger I should have above the 45. I'd probably have it about 45.15, just given the volume and everything else, and looking for that trigger, which would have been there. So I'm assuming I would have got hit on that 45.15, got some nice buy at 45.10, continuation here. See what happens at the 50. So nice ballsy. Right, straight through. I'd be looking for a very quick exit here in about 45.80 here. I think 45.50 is going to be my line in the sand. If it breaks that, I'm taking 60% off. But at this point, the price target is 46. Ooh, yeah, but I have to take the 60% off there. And maybe I missed that price target. Maybe it seemed like 49s would suggest that it should reach 46. And maybe I'm being a bit skittish. I obviously got spooked out of that position there. I'd be getting ready to take another 20% off about now. Those 90s do extend the price target with a pullback. Actually, it really wasn't a need to get out. Okay, I'm assuming they hit on the ask with the 90 and the ballsy prints camera. The exact number should get us to 46.50. And we're starting to see some profit taking here. My line in the sand for the remaining 20 is 46. If it doesn't look like it's going to hold, but target at this point is 46.50. There's been no buying above 46. Barely at print person. I know they're doing in 0 and 5, so it might just delay things a little before we get to the 46. I'd probably still be, actually, I'd be out now.
All right, let's open up the room to give you some feedback. Who wants to start? I mean,
Too
outside of
skittish.
oh yeah, but I mean, just with this long trade, you'd hit the nail on the head with the trade. However, in terms of following the market maker, you followed him in, you didn't follow him out. It's just that simple. You didn't follow that. You followed correctly in, but you didn't follow the continuation of what came in and the continuation of setting new price records for that off level. I think a lot of your management came out of thinking about your own pocket rather than what the market maker was clearly showing, because the way they came in at that double top there under a 45 50 there was just so significant shorter term now with great volume, ballsy. That didn't suggest taking, I think you said maybe 40% or more. It really didn't.
I think, yeah, I said 60. I got spooked out. I
Yeah.
realized that shortly after I said it that I got spooked out. Yeah. I mean, you're right. I think it was the 40, I think the 45, 49s. So it was pretty ballsy.
Right.
And they definitely said 46. I think I just got spooked out.
Yeah, absolutely. So that management aspect, you followed them in, you set up a game plan, but once you were in it, I feel like everything was kind of from maybe the hip, or just everything kind of got thrown out. So you were, calculated, within your entry and initial price target, but then that kind of got out of the way with what that new information was showing. So just that's some definitely a note for your journals, etc. When you're in trade, see if that's a common occurrence. But I mean, you definitely broke it down. There's nothing really more to add upon that breakdown outside of just the management aspect needed to be more concise with what was coming in and align with the market maker. If they get out, you get out. They hit their price target. You need to see extension, and that's the extension we just completely saw. So that continues the trade. If we don't see anything, then you manage accordingly. So it has to be definitely methodical and concise with how we manage. Not, well, I'm gonna take some off here or there. It has to be very reason oriented, based upon them, not us.
Sure.
But I can definitely see that first trade would be a little difficult. I mean, to be honest, it definitely was not an easy trade. I took it above 45, but quickly got out under 45. And then when it came back, started testing, just playing games there, just wasn't there. It could have shown more continuation, and the 30s could have, definitely been the controlling. And this could have continued on with great short-term under. That wasn't the case. It came back to 45, started to hit some buying once again. So that really suggested you needed to be out of that short if you did take that. And then, that alignment that came in pretty much under and above that 45 really suggested that this had the ability to really, make a run above. Those 10s, you had the 99s, I believe, and then 45s weren't crazy big to suggest, massive building. So it really aligned for the time frame of a now move above. And then the fall through just really kicked in above for the continuation.
Yeah, I think for me, I've been trying to obviously get the game plan right, the entry right, and it sounds like this is one of the next areas to work on.
Yep, a great job nonetheless. Not an easy one, but you definitely nailed that trade above 45. I don't think maybe a month ago you could have broken that down. I think you would have probably hesitated a bit, but you definitely did not hesitate. You even said, 15 is the trigger, and you took it, and definitely some improvement. Absolutely.
Sure.
Does anybody else have any further insights for David? Great work. Let's kind of watch this a little bit. I'm going to shut the recorder off. Feel free to stick around and chat informally if you would like.